Good morning. Thank you for tuning in to another pre-market pulse scan. This recording is for trading on January the 18th, 2017, Wednesday. The time is 8:56 a.m. Eastern Standard Time. See if we can make this quick. As you know, we're trading on a short week because of Monday's holiday. And we do have a few 9/11 alerts for the morning to look at to see if any rally alerts will take place. The first one is AG. All right, AG does have a rally alert, so you want to take a look at that. If you are flat in any particular security, you're going to want to look to tighten up stops where necessary, things like that. It should also be noted that in pre-market, AG has gapped up. It has gapped up in pre-market, and it's looking like it wants to take a run and bust out of the Kumo cloud. So you're going to want to have your tickets ready on that one. You really do. You don't want to mess around and miss that one. Because we have this gap that we need to contend with on the open. Let's see where we are. We may have already filled in the pre-market. Let's see. We got 923. We got. Okay, we have not technically filled that gap yet, so it may pull back a little bit on the open. All right, your momentum support is going to be at 907. All right, so the market can do what it's going to do as long as we don't close below 907 on AG. All right, just figure I'd throw that one out there. Okay, another one is CCJ. CCJ has a rally alert on that one. So you are going to want to have your powder dry on that one as well. Let's see what else we got here. Bear with me just a second. All right, let's go ahead and put it up here. CCJ. All right, CCJ is pulling back in the pre-market. So this one, I'm not that concerned about. Hold on, wait a minute. Charts don't like to act right sometimes. All right, here we go. All right, in the pre-market on the CCJ, we dipped down to 1168 on this one already. So this one you could say is pretty much crashing in the pre-market. So the rally alert has not played out yet on this one. So we're still just waiting to see what happens. Will it pulse wave today? On the daily chart, it is pulse waving, but right now it's not. It's in a continuation pattern, but it's not rallying right now. It's not in rally mode just yet. So we're still watching this one to see what's going to happen with it because we just don't know at this point. But it still looks good. I like it. I like the chart. I like the way it's set up here. I like the way it's popped already, and I still believe that it has some more upward momentum. All right, looking at FAS, it has a rally alert. That's the financial sector, the inverse ETF. Only I don't really believe any pullback in the stock market unless the nasdaq closes below 5,000. Then I'll know that the top is in and it's time to get long the paper on that one. Getting long the paper means to get long the inverse ETFs. All right, let's see. Here's one that we're not going to. Everyone loves to hate, and that's JNUG. JNUG has a rally alert on it also, but we all know it's going to be contingent upon what the GDXJ does. So, looking at JNUG as far as pre-market activity, for the most part, it looks kind of quiet. Nothing's really happened in the JNUG right now. It's poised for a possible bounce on the open, trading around 905. So the The price trigger is not far removed from the market. All right, even though overall the market is trading lower than where it closed based on yesterday's close. So just something to watch. Pre-Ricky has rally alert. Nugget has a rally alert. The silver space has one, SIL, SILJ. So the junior miners and the silver miners have rally alert, something to watch out for. Looking at the NASDAQ, the SQQQ has a rally alert. Not too far removed from the market, but far enough. Meaning that we're starting to get a little close to a possible pullback. It's not ready yet. Another one, UEC and URA both have rally alerts on them. I like the URA way better than I like the UEC. Even though the UEC is cheaper, it's just that it's in a situation where it really just it's trading within a very tight range. And I don't really see any signs of it getting out of this dollar handle in any time soon. You know, it has it traded higher? Yeah, but it's been at this around this price forever, and it's not doing anything. And you know, I have a rule when it comes to selecting shares to trade. I need something that has some kind of volatility in it. I need something that has good momentum in it, and I need something that has good liquidity. So you have to have those three things for me. You know, you just have to have it. You gotta have it. You gotta have volatility, and you got to have liquidity. If you don't have that, then there's no sense tying up money trading it. I don't care what the price is. You'll just be tying up money, unless it's a good dividend play. You know, they're paying a good solid dividend, and you know, and you want that when it comes to dividend investing. You know, you're looking for income. Then you don't want a stock that's volatile. You want one that barely moves at all. You rather it stay the same price as when you bought it. At least you know you're not losing in any of your principal. So you know what I mean. So in this situation, um, this I don't see this as being that candidate. So because of that, it doesn't qualify. I'm not in. I'm not interested. The UEC is still on there though, just in case. You know, just in case that that liquidity starts to enter into that market and the volatility jumps up, then that's something that can be looked at a further date. But like I said, right now, it's just not ready to pop. URA, on the other hand, is a totally different story. There's definitely some energy in that one. All right, URRE. So the whole uranium space has rally alerts. Silver has a rally alert. The USLV. I don't see UGLD on here, so that's interesting. So looks like silver wants to try to get ahead of gold going forward, at least in the near term here. Let's see. The quad U, that's ticker symbol UUUU. It has a rally alert on it. And let's see, UVXY has a rally alert. And like I said about stock market, I don't believe it. And this is far removed from the market anyway. Walmart has a rally alert. And it's interesting because Walmart, for the most part, has been an interesting play overall because in the last several weeks, it hasn't done anything. It's done absolutely, completely, and positively nothing. Let's see. Coming into this, though, as of Friday's, well, let's see, as of the 13th, as of the close of January the 13th, to where we ended up yesterday, it did move up a little bit. So this one may have a little bit more pent-up energy in it. So with that being said, I would have to consider taking a look at it. And I can tell you in the pre-market right now, we are falling in the Walmart. So right now, currently Walmart in the pre-market is at 67.60. All right, 67.60 is where it finds itself right now. So quite interesting. Not doing anything just yet. All right. Anything else interesting on here? Not really. This is like a week where the markets are going to try to do some more digestion, and you have to give the markets one more week, and then that's when we pretty much establish everything. Like one of the old sayings go, as goes January goes the rest of the year. January is a very critical month because it sets the tone of what's going to happen. Plus, we have this election coming up. I'm sorry, not election. This inauguration coming up. So, for the most part, I don't see too much happening. This week's going to be written off, and then next week is when we start to see everything move into alignment. Whatever's going to be bullish is going to be bullish. Whatever's going to be bearish is going to be bearish. And that's when we're going to really see the tone being set. So for right now, just not a lot to go on. You do have a lot of swing trade alerts, especially on the commodity side, only because the dollar's been down. So you have swing trade alerts, feeder cattle, live cattle, lean hogs, soybeans, silver, cocoa, crude oil. So keep your eyes open for those. All of those have swing trade alerts on those to the long side, so we'll be watching for that. And then you have a bunch of things too that are in no man's land. Some of them have trends locked in, some of them don't. So basically a lot of things on here have no clear direction, and I wouldn't even play them. I'm just being honest. For me, and this is just the way I use the pulse waves for my personal use, okay? I only like to take the 9-11s, the 4-11s, and the 3-11s. That's what I look for under the positive momentum column. If I don't see any one of those under the positive momentum column, I'm out. I'm flat. I'm not trading it. Even if it's my favorite. If I'm already long, I'll just hold my position and maybe tighten up the stop. But other than that, as far as looking for something to buy, that's how I do it. That's just me. If I'm looking to go shopping, I need for the positive momentum to have either a 3, a 4, or a 911. It's just that simple. Because then at least I know it's moving. It has something to it. There's something going on with it. Other than that, I think you're just kind of rolling the dice at that point, and you don't have a clear direction, anything clear to go on. And it's almost like taking a stab in the dark. And that's not a good thing ever to do. You never want to just be in a situation like that, because then you have too much uncertainty, and will it go, will it won't go, and then you could also find yourself in a situation where you're tying up capital that could be put to use in a better trade, where the market is moving and has a clear direction. So that's just me. That's what I look for. That's what I do. Another thing too is it has to be in a clearly defined uptrend. You want to look and make sure that that uptrend column has at least a 70 or an 18. If there's no 70 and there's no 18, then I generally don't want to be long that market because it's in a bear market or it's in a Kumo cloud, and that's not a good thing. So just remember that. Another thing too, remember if you see 1852, meaning it's either a 52 in the uptrend and an 18 in the downtrend, or an 18 in the uptrend and a 52 in the downtrend, that's a market that is in retracement. Okay, so you can trade those. Just look to make sure where the retracement is. Case in point, looking at today's daily sheet, you're going to notice that for ticker symbol UCO, all right? Ticker symbol UCO under the uptrend column has a 52, so the long-term trend is still in a bullish position, right? But you have an 18 under that downtrend column. So the 18 is your real directional indicator for the day, meaning that it's on the downside. So UCO is in a bearish retracement off of the longer-term bull market. But you have a swing trade under the positive momentum column. So what that means is that it's more than likely the market is not going to move up. It's not ready to move up. It's still in the downtrend. It's still, well defined on that side. So what you're going to do if you wanted to trade that particular ticker, you ain't looking to buy today. You're looking to sell it short. All right. And so you would go in, and that's what you would do. You would enter under the stop loss column. You would use that as your entry price to sell it short. And under the entry column, you'll use that as your stop loss to trail that position. You're just doing the inverse of what you would normally do on the sheet. The sheet is set up and designed for the long side only. That's how it's displayed, because it's easier to find something to buy than it is to try to find something to sell short. All right. Basically, you're only selling things short when you're in a bear market. Now, how do you know when the market is topped out on the bull side and is possibly ready to go and do the opposite? Well, that's simple, because that's where you're looking for the 911s and the 411s. So if you're looking at, let's say, let's use a good example here. Let's take COPX on the same sheet. You'll notice that COPX is locked in on the upside. It has a 70 under the uptrend, which you normally like to see, and it has a swing trade under the 311 momentum column. So what this is telling me for the day, if I'm going to be trading this one, yeah, I'm looking to buy it at the entry price, but look where the entry price is in relation to its stop loss. All right, this is what I would call a pretty tight trade. So if this one triggers, you're basically, not giving it a whole lot to work with. You're saying either this thing is going to run or it's not. And if it's not going to run, then you don't want to be in it. You want to be short, because that means it's possibly topped out. How do you know that? Because under the negative momentum column, there is a 911. That's a crash alert. Remember, 911s are rally and crash alerts. It's a crash alert when you see it under the negative momentum column. It's a rally alert when you see it under the positive momentum column. So in this particular example, COPX has a crash alert. So even though it's in a locked-in bull market, it may be running out of steam and ready to turn based on the algorithms, okay? You won't necessarily be able to see this just looking at a chart. All right, that's why algos are so important, because they tell you what you cannot see with the naked eye, what is not visible with the chart, which is not visible with traditional technical indicators and things of that nature. They fail you, okay? This takes the guesswork out of your trading. All right, so that's what you want to stick to. All right, so I do apologize for not able to do the seminar last week as I was ill. So all things being equal, let's try to do it for maybe possibly next Friday. Because this week is pretty much a short week. It's shot. It's nothing going to happen. We got this inauguration Friday and Saturday, so ain't nothing going down. So let's just focus on possibly next Friday. I want to cover and go over some things, and Lord willing, I want to add a few things too. Again, everything that I'm doing is to enhance, everything that you're learning and doing. And I just want everyone to be able to be successful, because at the end of the day, it's not about me. It's about you. It's about how many people I can make successful around me in that trading room. And once everyone is up to speed and making money and rolling, then that's what it's about. All right, so let's do this. So remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can from this market and give nothing back to this market. All right? See you at pulsewavetrading.com for all of you who know not what you are doing and want to learn how to extract money from the financial markets on a consistent basis so that you can provide for you and your family and learn to hedge your physical holdings as well. Peace.